sir. Where should we send the ambulance?
Send it to the frickin' moon, idiot.
Hi again, friends. I hope you're all doing really well. Today I'm going to do a brief update on meme stock heavyweight GameStop, ticker symbol GME. GameStop is generally considered one of, if not the original meme stock, and it releases July quarters yesterday in aftermarket trade. And in short, they were not as good as what was hoped for. In fact, they were actually far from it. Now, I love what happened with the GameStop share price. I thought it was brilliant how all of the short sellers from early on were forced out of the stock, and much of the stock was taken over by retail investors, with over 50% of the stock held by non-insider or institutional investors today, which is pretty significant when you consider the market capitalization is still over $14 billion. And what has been really impressive is the resolve of those shareholders to keep the stock price elevated, both in the face of a big capital raising and despite a number of other headwinds the stock has faced. So in short, the GameStop rally has weathered numerous storms before. I suppose the big question now is, can it weather this disappointing set of earnings? So what I want to do with this video is to have a look at these July earnings and have a look at how the stock has been behaving and its somewhat worrying aftermarket reaction to these results. So let's get into it. So looking at the financials for this quarter compared to the same time last year, GameStop posted much stronger sales and gross profit, and overall posted a much smaller loss for the quarter of $61.6 million or 85 cents per share, which has been adjusted to 76 cents per share, compared to the much larger loss of $111.3 million or $1.71 per share for the same period last year. The two big catalysts for this improvement are obviously the stronger sales figures, as well as the much lower interest expense, where GME only paid $500,000 this quarter compared to $7.5 million for the corresponding quarter last year. Flipping to the company's balance sheet, there is widespread improvement for GameStop evident. There is a much stronger balance sheet, with highlights perhaps being the extra $1 billion the company is currently holding in cash, and an overall much healthier level of liabilities, with one exception being a much higher accounts payable, which may actually just be a reflection of the greater volume of sales that GameStop has had compared to the same quarter last year. And as we commented before, the long-term debt for the company has been greatly reduced through the first quarter capital raising, helping to shore up the long-term profitability. And in a sure sign of improvement, overall the level of equity in the company is almost 50% greater compared to the same period last year. Looking at these financial records, you can see the problem that GameStop faces, that being the high leasing costs for the various locations they have around the world. In many ways, it is an outdated business model for an industry that is increasingly being served and based around online activities. There is clearly some efforts by the company to pivot from this, but at least for the time being, I think these ongoing leasing costs are going to be an ongoing challenge for the business. Hopefully they are able to successfully strengthen their profitability and sales in other areas and make prudent decisions around the ongoing nature of not profitable store locations. So with all of the improvement for GameStop from a financial perspective, why has there been such a negative reaction in the aftermarket trade? Well, basically, despite these improvements, analysts were expecting a better result, that being a loss of 67 cents per share. And like we pointed out before, the adjusted loss was actually 76 cents per share, which is a result that is 13.6% worse than what was projected. So as you can see with this Google chart, GameStop actually traded fairly flat throughout the regular session. And this was again a general market that was confronted by wider headwinds, causing widespread underperformance by many stocks and sectors. So this is actually a reasonably good performance from the stock. However, you can see when GameStop released their quarterly results at 5 p.m. there was a sharp drop in the aftermarket, falling to a close of $181.47, which is almost a further 10% down from the closing price in the regular session. I suppose this isn't totally unexpected when you consider that they missed analyst projections by over 13%. Looking at this 30-minute chart, we can see that following the latest rally for GameStop in late August through to early September, there has been a slow decline in the stock price, posting a series of lower highs and lower lows, which are captured quite nicely with these two green trend lines I've drawn on the chart. As you can see, the aftermarket action puts the price outside of these two trend lines, which I'm guessing will likely occur in the regular market trade if all things hold equal, which is far from being a sure thing when it comes to GameStop and other meme stocks. So I'm not 100% sure on this. I believe the August rally was a response to anticipation of good July results. So now that the reality has dawned, I would not be totally surprised if we see a retreat in the stock price back down to the pre-rally levels around the $160 mark. Meme stock investors may see this as an opportunity to buy in, but it will be interesting to see how the resolve of GameStop investors holds out in this landscape, which is increasingly flooded with more and more retail darlings. So just to finish off, it is no secret that GameStop is heavily overpriced following its monster rally at the start of this year. This has actually allowed the company to improve its balance sheet through the modest capital raising they did in Q1. Because of the higher share price, there was not a strong dilution effect and therefore did not hurt the stock price significantly in hindsight. Like I said before, it will be interesting to see how the resolve of those holding onto GameStop is tested when regular market trade resumes on Thursday. I hope for those long on the stock that it does not waver too much. Looking at the company from a longer term perspective, GameStop are attempting to make some important developments towards pivoting their business for longer term profitability. It will be interesting to see if they can deliver further improvements to the balance sheet and income statements in the lead up to the important Q4 and Q1 trading periods, as this is the window where the largest percentage of their sales come from, given that Christmas, Black Friday and New Year sales, etc. all fall in this period. They're a little bit like bookshops in the sense that 60% of their sales comes in this window. Anyway, what do you guys think? How do you think the July results are going to test the resolve of the GameStop shareholders? How do you think the company is going in terms of shifting towards a more profitable and sustainable business model? Let me know your thoughts in the comments below. Finally, if you are new here, I would like to let you know that I am looking to set this channel up as a social enterprise going forward, meaning I want to use the profits generated from YouTube advertising to support a range of good causes that I feel passionate about. So by watching videos and following the channel, people are able to make a difference to these causes without donating any money, but simply by donating their time and attention, as the profits, like I said, come from YouTube advertising. I think it's a unique way to use YouTube to make a difference in the world, and I'd love for as many of you to be a part of that as possible. Anyway, until next time guys, may the markets trade in your favor. Cheers.